October 2025 just became crypto's most dangerous month, and almost nobody sees it coming. By the end of this video, you'll know exactly what catalyst is about to repeat the worst crypto crash in history, and whether your portfolio is positioned to survive or get crushed. Bitcoin just hit a critical moment. The same pattern that triggered October's infamous Black Thursday crash is setting up again, and major institutions are quietly repositioning. The data doesn't lie. Very time this specific catalyst appears, Bitcoin drops an average of 37% within weeks. Here's what's happening right now. Multiple economic indicators are flashing the exact same warning signals we saw before the 2022 crash. Stock markets are showing cracks. The in-correlation with Bitcoin just hit 92%, which means when traditional markets sneeze, crypto catches pneumonia. Indeed, there's one detail almost everyone missed about this setup. I'll get to it in a moment. First, let's talk about what makes October so dangerous. History shows us October is either crypto's best friend or worst enemy. October 2023 gave us a 30% Bitcoin rally. October 2021 pushed us to all-time highs. But October 2018, 24% crash. October 2019, another brutal drop. The pattern is clear. October forces a decision, and 2025 is shaping up as a decision month. Here's why. The Federal Reserve is walking a tightrope between inflation and recession. Their next interest rate decision falls in early November, which means October becomes positioning month. Big money doesn't wait for announcements. They move early. Right now, Bitcoin is testing a make or break support level around $61,000. Technical analysts are calling this the line in the sand. Hold it, and we're looking at potential runs to 75,000 or higher. Break it, and we could see a cascade down to 52,000 fast. But here's that detail I mentioned. The catalyst everyone's missing isn't just rate decisions. It's the liquidity crisis brewing in traditional banking. 3 major regional banks just tightened lending requirements this week. That's the canary in the coal mine. When banks get scared, they pull back, and when they pull back, liquidity dries up everywhere, including crypto. Now, let's connect this to the bigger picture. The IO 20022 banking standard is rolling out across major institutions, and this matters more than most people realize. This new system is designed to handle cross-border payments faster and more efficiently. Tokens like XR, Tellar, and Legorand are built specifically for this infrastructure. When traditional finance faces stress, the new financial rails become more attractive. Banks want alternatives. They want speed. They want lower costs. The October catalyst could actually accelerate institutional adoption of IO 20022 compliant cryptocurrencies, even while Bitcoin faces pressure. Think about it this way. Crisis in the old system validates the need for the new system. Very bank that struggles with slow settlement times or liquidity crunches becomes a potential adopter of blockchain-based solutions. The timing couldn't be more perfect for tokens positioned at the intersection of traditional finance and crypto. What should you actually watch? First, monitor the $61,000 Bitcoin support level daily. Clean break below with volume means we're headed lower fast. Second, watch the dollar strength index. When the dollar rips higher, it usually crushes crypto. Third, keep eyes on stock market volatility. The VIX above 25 historically means rough waters for risk assets. Here are your specific dates. October 15th brings the next inflation report. October 23rd is earnings season peak for major tech stocks. Ending November 1st, the Fed decision looms. These are your landmines. Price action around these dates will tell you everything. If you're looking to position yourself during this volatile period and want to actively trade these moves, you can use BitUnix with the link in the description to get started. One more thing to watch. Institutional Bitcoin TF flows. When BlackRock and Fidelity start seeing outflows, that's your red alert. Right now, flows are mixed, which means institutions themselves are divided. That indecision creates volatility, and volatility creates opportunity for those who are prepared. The October catalyst is real. The danger is measurable, but danger and opportunity are two sides of the same coin. The traders who survive October will be the ones who plan for both scenarios. Don't get caught hoping for the best. Rep R for the worst, and you'll be ready for anything. This is educational content only, not financial advice. Ways to your own research before investing. The crypto market is highly volatile, and past performance doesn't guarantee future results. Follow Stack Daily 60 for daily crypto and money tips.